This video is for educational purposes only and is not financial advice. I am not a financial advisor. Investing involves risk, including loss of capital. Any tools or strategies mentioned do not guarantee profits or future results.
Can a pre-IPO opportunity linked to SpaceX actually exist before the public even gets access? That's the idea behind a strategy promoted by Mark Skousen. And in this video, we're breaking down whether it actually makes sense. Let's make this simple. First, understand the core claim. The argument is not about buying SpaceX shares directly. You can't do that because it's still a private company. Instead, the strategy focuses on indirect exposure before a possible IPO. And this is where the opportunity is supposed to be. Because historically, a lot of the biggest gains in major IPO stories happen before the IPO, not after. Now, why SpaceX? SpaceX is not just a rocket company anymore. It has reusable rocket technology, massive government contracts with NASA and defense agencies, and a growing ecosystem through projects like Starlink. There are even discussions about a future valuation that could reach extremely high levels, potentially putting it among the most valuable companies in the world. So the logic is simple. If a company of this scale eventually goes public, the entire space economy around it could move first. Now let's talk about the strategy itself. Skousen's approach focuses on two main ideas. First, finding funds or vehicles that already hold SpaceX exposure. Second, identifying partner companies and suppliers that benefit from SpaceX's growth. This is similar to how investors made money during the rise of companies like Apple. Many of the biggest winners were not just Apple itself, but the companies supplying parts, infrastructure, and services. So instead of waiting for the IPO, the idea is to position early in that surrounding ecosystem. Now, let's talk about what you actually get if you follow this approach. The research is delivered through a subscription service that includes monthly reports, weekly updates, and a model portfolio. The monthly reports focus on long-term trends like technology, global markets, and innovation sectors. The weekly updates are designed to react to changes quickly, especially if something major happens around SpaceX or related industries. There is also a model portfolio that shows how these ideas fit together, which can help connect individual opportunities into a broader strategy. And importantly, there are specific reports focused on SpaceX. One looks at a fund that already has exposure to SpaceX. The other focuses on three companies connected to the space economy, including suppliers and infrastructure players. So instead of just theory, the goal is to turn this into something actionable. Now let's talk about the reality. The biggest risk here is uncertainty. There is no confirmed timeline for a SpaceX IPO. It could happen soon, or it could take years. And if the IPO is delayed, the entire strategy becomes more about long-term trends rather than short-term gains. This also means patience is required. These are not quick trades. They are based on the idea that major technological shifts take time to fully play out. Now let's look at the pros and cons. On the positive side, the strategy focuses on a real trend, which is the growth of the space economy. It also provides structured research, not just random stock tips. And the presence of a long refund window reduces some of the risk of trying the service. On the downside, everything depends on execution and timing. If SpaceX delays its IPO, or if the surrounding companies do not perform as expected, returns may take longer or be lower than expected. Also, indirect exposure is not the same as owning the main company, so the results can vary significantly. The bottom line is simple. This is not a direct bet on SpaceX. It is a thematic investment strategy built around the idea that large technological shifts create opportunities beyond the main company. If you understand that and are willing to take a long-term view, the approach can make sense. But if you are expecting quick profits from a SpaceX IPO, this strategy may not match that expectation. And that's the difference most people miss.